Assalamualaikum. My name is Nurul Balkis Afifah. I am with my friend Najwa Shakira, Azara Sofia and Siti Zulaika. We will be presenting about macroeconomics problems during COVID-19 pandemic. The subtopics that we will be presenting by us are introduction, macroeconomics problem during COVID-19 pandemic, and lastly will be conclusion. Apparently, macroeconomics is the branch of economics that studies decision making for the economy as a whole. COVID-19 is caused by a new coronavirus that first identified in Wuhan, China in December 2019. The COVID-19 pandemic is said to become one of the most economically costly pandemics in recent history. In today's highly connected and globalized world, these risk mitigation actions have caused a major shock to global economy. The full economic impact of the COVID-19 outbreak is currently unknown and will take some time to materialize. So for unemployment is a situation in the economy where there are people between the age of 16 until 65 years old who are not working but actively seeking jobs. And then the COVID-19 pandemic crisis is hitting people harder and faster in difficulties in finding job and income losses. Then workers are continuously flowing into the pool of the unemployed. On the global chart of unemployment, it says the American labor market suffered the most. Recently, a New York Times article was titled 7.7 million young people are unemployed. Then we go to almost 267 million young people are not employed, studying or undergoing training. Those who were employed are also more likely to take informal jobs such as low-paid occupation, part-time job, or as migrant workers. So we go to a local chart of unemployment, which is our country, Malaysia. Malaysia's labour market felt the brunt of the movement control order implementation, with unemployment in April spiking to 5%, the highest since 1990. The department said the most affected employed were in the manufacturing and services sectors, namely accommodation, food and beverages, arts, entertainment and recreation, and other services such as beauty centers and salons. Dr. Afzal Nizam Abdul Rashid said he was expecting the unemployment rate to hover between 5% and 6% during the MCO period due to the shutdown of the economy, which caused many businesses to consolidate their workforces. Then Chief Statistician Datuk Seri Dr. Muhammad Uzi Mahidin said Malaysia's labour market in May is expected to be further affected following the implementation of the conditional MCO starting May 5, as businesses were still not fully in operation.
Assalamualaikum, I'm Najwa, and right now I will explain the second macroeconomic problems that occurred during COVID-19, which is deflation. So, what is deflation? Deflation is a situation where the general price level of goods and services decrease over a longer period. When the COVID-19 virus spread widely, the government instructed us to control our movements, and it causes us to not be able to do daily activities such as working as usual. This ultimately the reasons why the country's economy declined during the pandemic. This falling economy begins to have an impact on the health of the companies because the companies are forced to cut pay and lay off workers in response to falling revenue, and this results to the increase of unemployment, incomes declining, and consumer confidence decreasing. When incomes decline and confidence is lowered, consumers decrease their spending, and this creates another situation where companies are pushed to cut their prices in order to sell their products. This situation is leading to deflation. Price stability cannot be achieved when an economy faces deflation because price stability is when there is little to no change in the economy over a period. This means that there is a lack of inflation or deflation occurring with prices. We can see that the consumer price index of Malaysia decreased until negative since the COVID-19 spread here. If the CPI declines, that means there's deflation or steady decrease in the price of goods and services. Besides that, here we can see that South Korea also faces deflation. The price of goods and services at South Korea decreased until negative twice during the pandemic of COVID-19. The production of goods and services also decreased during the pandemic of COVID-19. The effect from this problem is over the period, the gross domestic product will decrease. This is due to the factors that contributing of economic growth. For the example, human capital can affect the production of goods and services. During the pandemic of COVID-19, the companies will decrease their investment in human capital. That means they are not recruit any skilled labor to improve their quality of the labor force. In fact, they are forced to cut pay and lay off workers. This is due to the decline of country's economy during the pandemic, which led to falling in the revenue of the company. Since they do not have enough of labor force, their production of goods and services will be decreased. There will be no economic growth, which refers to situation where the company experiences an increase in GDP over a period since the production of goods and services decreased during the pandemic of COVID-19. Also, we can see that the GDP level of the global in 2020 is the one that decreased drastically rather than other years. This proves that because of COVID-19 pandemic, there is no increase in GDP, and at the same time, there will be no economic growth too during that period. Here we can see the level of gross domestic product for Malaysia during COVID-19 pandemic is decreasing. This is probably because there is decreasing in production of goods and services.
Assalamualaikum, I'm Azhara Sofia. So the next problem is progressive loss of key export markets. So it is one of the balance of payments difficulties, and the balance of payments difficulties like a progressive loss of key export markets may develop slowly over time and can result from developments of the country. A country will try to get an overall surplus balance of payments. That means inflow of the money exceeds the total outflow. A situation for deficit in balance of payments. A deficit in balance of payment will arise if the total outflow of money exceeds the total inflow. If a country keeps experiencing a deficit over a few years, it can give rise to debt problem of the country. Okay, for this problem, we're gonna look at Malaysia's first. So, in April 2020, Malaysia's trade decreased by 19.4% compared to April 2019 due to COVID-19 pandemic, which caused major disruptions to global supply chain. And our trade balance recorded a deficit in April 2020 after 269 consecutive months of surplus on account of a higher contraction in exports compared to imports. Malaysia's trade during the first 4 months of 2020 dropped by 3.5%, and that is quite a lot because the value of the amount dropped is 573.75 billion ringgit. And compared to the corresponding period of 2019, our trade surplus was valued at 33.47 billion ringgit Malaysia. It is declined by 29.9% compared to the same period of 2019. On the April trade performance, our Senior Minister and Minister of the International Trade and Industry, Yang Berbahagia Datuk Seri Muhammad Azmin Ali, said that the declines in both exports and imports are expected given the most countries around the world were under some form of lockdown to contain the spread of COVID-19. Nevertheless, exports of some products such as iron and steel, rubber gloves, and refined palm oil recorded increases during the COVID-19 pandemic. Okay, for the global, the economic and social disruptions brought by COVID-19 has resulted in a substantial reduction in global trade. So as you can see in this graph, already on a downward trend, global trade took a sharp downturn in the second quarter of 2020 with a drop of about 19% compared to last year second quarter of 2019. Data for third quarter suggests that while rebounding from second quarter, global trade growth has remained negative in third quarter with a decline of about 4.5% on year-over-year basis. And this is the world map. It has been labeled with their trade performance, and as you can see on the second quarter of 2020, global trade has fallen drastically in most regions, in both export and imports. The next problem is inequality distribution of income. So income defined as household disposable income in a particular year. Income distribution is the equality which income is dealt out among members of a society. So if everyone earns exactly the same amount of money, then the income distribution is perfectly equal. A society's income distribution falls somewhere in the middle between equal and unequal. Disregarding exchange rate changes, household wealth would have grown in all regions without COVID-19. However, currency depreciation would probably lead to falling total wealth in current USD terms in Africa and especially Latin America, as reported in the table 2. You can see that the total the change in total wealth from January to June 2020 for Africa decreased by 2.5%, and For Latin America, decreased by 12.8%. While in the US, over 44 million people lost their jobs, and employment surged towards 15% between April and June 2020. Yet the fortunes of the top 5 billionaires rose by 102 billion, and they are increasing their wealth by 26%. In fact, in combined wealth of the billionaires increased by over 637 billion dollars to a total of 3.6 trillion, which is considerably more than the entire wealth of the 54 countries of the African continent. Some of the biggest winners are those with high stakes in the technology sector, digital rental vendors, conferencing platforms, and social media groups are reaped the benefit from the lockdown and shift to remote work. And the spectacular accumulation of wealth in the hands of a small minority is ramping up pressure to tax the rich and their heirs. So in this in this graph, you can see that the billionaires gain 1 trillion since the pandemic started, and that's quite a lot of money. So the billionaires Jeff Bezos increased his wealth by 61.4%. Elon Musk increased his wealth by 413%. Bill Gates increased his wealth by 21.8%. Mark Zuckerberg 85.9%. Warren Buffett 30.8%.
Assalamualaikum and hi everyone. My name is Siti Zulaikha, and for today I will present about the next problem, which is postpone of infrastructure construction and employment opportunities, which is one of the problem to get a better quality of life. The quality of life refers to a decent living to be enjoyed by the community. Through the physical policy, the government will try to meet the needs more of comfortable life, including in a particular the basic needs of shelter, infrastructure, employment opportunities, and education. But during the uncertainties with regard to this pandemic have affected the construction industry. Despite the effect of COVID-19, a few construction industry activities have been maintained to some extent and are likely to continue in the very short term. There is no complete lockdown in several countries, and hence companies are willing to continue executing their contracts to avoid liquidation damage. However, these activities are expected to halt soon as supply chains are disrupted by a shortage of equipment and materials. In addition, public agencies and administration are beginning to terminate contracts to control their expenses. So for this problem, we're gonna look at the global graph first, which is it's showing that the global construction market size is expected to decline from USD 11 and 217.4 billion in 2019 to USD 10,566.8 billion in 2020. However, the industry will show signs of recovery in 2021 and reach a market size of USD 11 and 96.7 billion, projecting a CAGR of 1.2% between 2019 and 2021. However, they taking an extensive step to minimize risk of COVID-19 spread, and many workers remain too reluctant regarding potential exposure to COVID-19 on the job. Even at sites that remain open, the absenteeism rates are high among the workers. As a result of this factor, the company is establishing widespread test and trace capabilities so that the worker can return to their work. So far, the Malaysian graph has shown that the local construction players are in for a slow earnings recovery path. Following business disruption and employment opportunities become lower during the Movement Control Order (MCO) due to the COVID-19 pandemic and also delay in restarting operation. Next, the graph showed that the start of the year, they had projected a sector core earning per share EPS growth of 13% year-on-year in 2020, recovering from earnings contraction over the previous 2 years. Following the earning cut, they now expect the sector's core EPS to contract by 24% year-on-year in 2020 for the third year in a row before recovering to a growth of 3% year-on-year in 2021. Other than that, the Construction Industry Development Board (CIDB) in a recent survey noted that work had yet to start at 23% of construction sites in the country due to several factors such as financial problems, labor shortage, and not being able to comply with the Standard Operating Procedure (SOP), especially on the needs to send workers for COVID-19 screening, which is involved costs and causing job opportunities to be lower during the MCO. Lastly, for the conclusion, we can see that the COVID-19 has emerged as one of the pandemic health menace, and this pandemic disease is worsening the country's situation because it is get hampered both in terms of health and economics, and job opportunities are declining because of this COVID-19 pandemic. In the current climate, it is important to take the time to conduct a full risk assessment on the impact on business activities and evaluate all options and remedies and provide more employment opportunities in order to redevelop the country's economic growth in a new norm.